Okay. I think I'm streaming. All right. I think I'm on here streaming, guys. I can see your chats. What we're gonna do then is we're hoping to kick this off at 7, which is in 7 minutes. But right now, if you guys could just let me know if things working correctly, is it streaming correctly? If for some reason during this training, oh shit, hold up, close that. Okay, here we go. Anyways, like I was saying, guys, we've got a little bit of delay. We've got about a 20-second delay in what I'm saying, which is all good. But anyways, if you guys can hear me and make sure that everything's working good. If for some reason it starts getting choppy when we start going through these charts, I've had some problems with YouTube Live, and I'm trying to get my OBS set up, which is my program that I go live on. I think I got it figured out over the weekend, but for some reason, if it gets sketchy, we'll close down live, and I'll send out a Zoom link, and we can all join on Zoom, no problem. I just wanted to do this live, so maybe we have a broader audience in the YouTube world, if anybody who wants to jump on. So we'll get this started here in 6 minutes. We'll give people a time to get on. I told everyone 7 o'clock, so we'll wait for that. I kind of like Zoom's better because you guys can interact with me and we could chat. Maybe I'll on the next one we'll do both. We'll have a Zoom and an OBS, and that way if you guys want to speak up. But I'm afraid that if I do it now, that the fucking Matrix will crash, right? Yeah, it was repeating the audio because I forgot that I'd had the internet on with my YouTube on. So I talked here, then 20 seconds later it played on my screen and it was doubling up. But I shut that shit down. We're good to go. So it's Sunday night. Man, I'm feeling good. I was on a pretty strict diet all of January. No drinking, no screwing around. So I'm actually having my first scotch on the rocks right now. It's been well over a month. It's like Christmas time. So I'm just taking it easy now. Shout out to anybody who's a scotch drinker. Um, Good old Lafroig, my my favorite scotch. Good old Isla Scotch. Well, right now we got Jason, we got DC, we got Brett, Fausto, my man, Mr. Nas Killer Fausto, on here. And again, guys, we're just waiting. We're gonna wait for 4 more minutes, and we're gonna get this party started. And I'll get into the whole spill at 7. We'll kick off. But what I plan on doing is we're gonna just go over some basics of the strategy. And again, I would say basics, not as far as basics in trading, because you guys, if I start saying what Fibonacci's and Elliott waves and things, just make sure I would hope you guys know what that means by now. So we're not breaking this down as a day one entry level trading kind of a talk. This is I don't want to say advanced, but DC's in here with some scotch as well. What's up, man? So this isn't really like too advanced, but it's obviously not beginner level, so it's kind of like in the middle, right? And then we're gonna look over the strategy. I'm gonna talk about it. I'm gonna go through it. We're gonna look at some examples, and then we're gonna look at what I think tomorrow's got for us, and we're gonna smash some trades. Give me 1 second. I'm gonna turn my fan on. Scotch is making me warm. All right. We got 7 people in here. Connected viewers should be 6. We got 6 in here. Hey, 6 is better than 0. All right, guys. We're trying to build something here. And we got a couple of minutes. But I wanted to say thanks to you guys, for everybody who is joining in. Thank you very much. You guys can put your chats in. I'll try to my best to keep up with that. And, yeah, man, we're going to do this thing. Hopefully we'll make some money this week. But for any of you guys who know the way I trade, you guys can see NASDAQ. You guys probably already know what I'm waiting on here. GJ, we're not started yet, so I'm just showing you where some stuff is at, right? GJ, you already know that I probably did what right here, right? Look at this area, all right? Resistance, 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 support, support. Maybe a little bit of a wick up to clear its liquidity, and then yank. You know I'm waiting on that. And then, of course, we'll go over the nasty, the dirty, and the goldie. We'll go over all of those. All right, guys. All right, all right. All right, 2 minutes. We're going to wait for 2 more minutes. We got patience. As traders, we need to learn patience, which is the hardest thing in the world for me to do. And look at this beautiful Solana. I know that, so not only do we have the PIP guys in here, I also sent the link out to the Bored Apes. So anyone who's in here from the Bored Apes, thank you guys very much for coming by. I hope to see more of you guys in here because I know the Bored Apes, why the PIP Connect is, you know, primarily Forex traders. The Bored Ape, which would be 100% NFT guys, but they also do some trading. So, you know, I think these two markets, as far as the NFT, the crypto, and the Forex space, is all very closely intertwined. So I hope to bring some of those Bored Ape guys, NFT guys, over to the trading side with us, and to help us grow this community. I mean, for the Bored Ape guys, there's like 6,000 different apes across a couple different what they call ecosystems or communities. And so I hope to pull some of those guys, and we just, you know, we grow stronger together in numbers, you know, and hope to do this damn thing. But when it comes to the old Solana, I think at the $90 mark, I'll be popping in some more buys at the 90. So, well, okay, 7 o'clock. Here we go. We'll go ahead and start it off because I'm a military man. I don't like being late. So we're going to start this live stream off. Thank you guys very much for coming in. I'm your boy, HOUTX Trader. Also go by Big Tuna. You can find me on Instagrams, find me on YouTube, and everywhere else, I suppose. This session tonight is going to be for training purposes only. This is not financial advice. If you need financial advice, please go see a financial planner. Okay, guys? So what we're going to do tonight, and first of all, thank you guys very, very much for being here. I really do appreciate it. I am very grateful for you guys. You guys keep my mind sharp, and y'all keep me on point. And I love helping you guys. I love training. I love teaching. I should have been probably a physics teacher if I'd have had better guidance in my life, but hey, it is what it is. So I wanted to go over a couple things real quick before we dive into the charts. I know you guys are here for primarily for strategy and technicals and whatnot, and we will definitely get to that in 1 minute. But here we go. I wanted to go over things. So as a trader, perhaps a lot of us overlook this probably most important part of trading. Before we even get into the game, before we even look at the charts, I want to say your nightly routine followed by your morning routine is very, very, very important, okay? As you guys know, for the last week or two, I've been doing nighttime calls where we look at the charts, we plan out this if the market does this, this is our plan A. If the market does this, this is our plan B, okay? It is very important that we get to that stage where we're on the charts and we understand what's going on and we're ready. We have a plan, so we're not caught off surprise. We're not caught off guard, okay? There is no way in hell you should wake up in the morning and start trading from your phone, or before you go to bed at night, pop a trade or some shit like that. This is horrible preparation. My football coach just told me piss poor performance prevents, what did he say? Perfect practice prevents piss poor performance. So you got to practice and you got to have, you know, everything in line, your P's, right? And that'll prevent your piss poor performance. And that's what we're trying to do here tonight, guys. We're trying to look over the strategy and we're trying to get a feel for what the market's going to do, formulate a plan. So tomorrow morning when we wake up, we do our morning routine and then we smash the markets, which we have been doing. Yeah, I've been spot on for last Friday. Yeah, exactly. And so I wanted to cover my morning routine with you guys. And this is something that I do. Okay, guys? So obviously the night before, we prepare. I do the live calls. We mark the charts up. In the morning, I wake up at 5:30. The only reason in the world that I wake up at 5:30 is to trade. Believe me, there's no way in hell I'd be waking up at 5:30 in the morning if I wasn't a trader. So I get up early just for trading. I come into my office, which you see here. And on the other side of my desk, I have a space. And I sit there for a couple of minutes. Maybe I stretch my back out. I have some stretchers and some rollers and some foam balls and things. And I stretch out. And I get my mind, just wake up for 5 minutes. And then I sit Indian style. And then I have like a prayer. And I thank the Lord for what I'm grateful for. And it gives me time to reflect on my life. That the fact that the Lord has given me this, and I'm not trying to be religious. I don't care who your Lord is, and it doesn't matter who your Lord is. I'm not saying it has to be anybody. Just reflect on the fact that you have life, you have your family, you have a house, you have the internet, you have the computer, you have all of this stuff in front of you. Just think of how grateful you are and have time to reflect on that. And it sets your mind right. It gets you in a positive space. And do that for 10 minutes, 5 minutes, whatever it is. Just give yourself a time to remember in your head how lucky you really are and how lucky we all are. So I do that, followed by some meditation. And it could be 5 minutes, it could be 10 minutes, whatever. It's what it is for the day. Usually my back starts hurting because I'm sitting Indian style. So then I got to stop and I go back to stretching out. And then after that, then we start getting into the technicals, and which we're going to do now. But I just wanted to cover that real quick. It's very important to have a nightly routine and a morning routine. Okay, technicals. This is what I wrote. First thing you want to do when you walk up to a chart, and we're going to start with, let's just start with gold. Or we can start with 30. Everyone seems to love 30. First thing I want to do, and again, this isn't like I do this every morning because I know where we are. But if you're walking into a new pair or you're walking into something, you want to zoom out a little bit and just get a feel for what the market's doing. Okay? Look at 30. Ever since COVID, I mean, this is 17, 18, this is Trump era, right? Pre-Trump, 17, Trump. January when it gets inaugurated, shit hit the fan, and then just pure liquidity after that. Build up, COVID. Down, after COVID, all of that money got injected into the market, took off. Correction, take off. Okay, so I'm gonna undo all my drawings, which is just up here, but I wanted to show you this higher timeline on the fib. Okay, we still haven't had a proper retrace on the Dow from this US this COVID push up. Okay, now if we were to draw the fib from this swing low to here, that is a proper retracement. This sell-off that happened because of COVID was no accident. This mark, this place that it turned around was no accident, guys. Look at that. I've been telling you guys all along that we buy. Okay, so if we're going into strategy, you want to start writing notes in your book. Write in that we like to take trades at the 78.6, 88.6 area. Okay? Again, we're not getting super heavy in the technical analysis right now. I just want to show you the big time frame and how you can zoom out and you can look at the charts. So let's do the same thing on NASDAQ. Okay? On the NASDAQ, we had COVID here. And we drew top to bottom Fibonacci at 61.8 and it turned right around. That's a proper retracement. And now NASDAQ, since it has done that, now has green grass and glory ahead of it to set an all-time high because it had a proper retracement. And again, we'll talk about this later, but with our Fibonacci's, we want to see at least these Fibonacci's hit the 27 extension, the 23.6 if you want to be technically correct. I have it as a 27 just because I'm probably retarded and dyslexic, and that's the way I have it labeled. I don't know why, but I should probably change it. But anyways, know that when you come out to this larger time frame, you can see the market and how it moves. It starts to paint a picture for us, okay? And we'll look at GJ too. So when you come out, I'm not saying that we're taking trades off of these levels. I'm just showing that if you have a chance to zoom out, you can see what the market is doing. And you can then maybe throw a fib on there, okay? And you're like, okay, well, look at this huge sell-off. And it has slowly started retracing. Well, guess what, guys? Where's the market now? Okay? You wouldn't have known that the market is at the 88.6 if you wouldn't have come to this larger time frame and scaled out. So if we, right? Look at prices direct. I mean, you can't see because I have all these fibs in here, but prices right at the 88.6. Prices prime time ready for a reversal. Okay, so the first thing I have in the strategy is go to a larger time frame, and I'm not getting technical super deep right now. Just know that you come out. Let's just take a look and let's just get a feel for what the market's doing. Okay, The US 30 hasn't had a chance to fully retrace yet. Okay, it came down to the 38.2, messed around, and then setting all-time highs. But really what I like to see is this up here, and for us to get a true. Okay, this is something else. If you draw a fib top to bottom, and you have it top, and you start to see behind it that levels are starting to be respected, even though this is in the past. Look at this 618. Look at this fib. Look at this 38.2, almost a 38.2 here. It's no accident. There's no accident that these levels, even though they're in the past, are getting respected. Okay, because it's all ratios, and even though this is present, this got to this level because of these past ratios. Okay, so that's what I wanted to say. Let's zoom out. Once you do zoom out, again, we're going to do the majority of this explanation on the gold. Once you zoom out and you go to the daily and you start to look, you come down to the 4 hour into the 2 hour, and you start to look at what the market is doing now. Okay, so I want to start back here, and what the main crux of my strategy is, the heart and soul of my strategy, is to look at what the market's doing. We start to build Fibonacci's, and we start to look at liquidity zones. Okay, so if we look at any time we have double tops, those are going to get taken out. Same thing for double bottoms. If you have a situation that has a double bottom, know that it's going to go sideways, and then it's going to hunt one of those two areas. Okay, whichever one it takes out first, in this case this one, we would draw the Fibonacci. Again, we would already have these fibs drawn prior to market open. We would do this on Sunday night or the night before. You would have these Fibonacci's drawn from, in this situation, because we're in a bullish market from bottom to top. Okay, and this would give us a zone. Now this zone may not always perfectly be adhered to. This one broke a little bit below the 88.6, but our stop loss is always at 10% of the overall move. So if we entered here at 88.6, which is also the bottom of this, our stop loss would have been here, and we got nowhere near to hitting our stop loss. Okay, when I say 10%, I mean as this Fibonacci grows, the stop loss grows. See how it's getting lower? But as the Fibonacci shrinks, the stop loss shrinks. We're looking at 10% of the overall move. So from here to there, from wherever we started the fib to wherever we ended the fib, our stop loss is always 10% of that overall move. Okay, we'd like to enter the 78.886, but this is also dependent upon oversold on the RSI. Okay, so once it gets into our zone, which is here technically, and is just starting to get oversold on the RSI, we come down to a little bit smaller of a time frame. Let me reset this. Okay, and we're looking at this trade over here. You can see that there, which lines up with right here, right there, it's oversold. You could have popped an entry there. We could have gone to smaller time frames, or we could have been patient and waited and see. We could have waited for divergence. I like to do divergence on a much smaller time frame, but we're just kind of showing you what divergence is now. Okay, price is getting lower as the price is getting, as the RSI is getting weaker. The strength is getting weaker, but price is getting lower, indicating us a turnaround. Now we had a bottom, we had a push, we had a retest, and then a go. So this entire time, if you had entered here at the 78.6, you would not have been wrong, even though we're not oversold. So technically, yeah, you would have been wrong. We would have entered right there as it hit the oversold. Your stop loss would have been there, and you would have seen very little drawdown, and our TP would eventually be this. We're not there yet. Okay, this is why I think the market still has room to push on several reasons, but there's one reason why I think it still has room to push. Okay, we'll just remember that this is up here as the double top. Okay, we'll get rid of this box, but in the meantime, know that if you did take that trade And let's just, let's just measure. If you would have taken it right here, and you would have gotten out somewhere up here, I mean, you're 700, 800, 9. I mean, you're in so much profit by now that there's no way in hell that you haven't at least shaved some profits off or moved to break even, right? It's so much profit. It's ridiculous. Okay. So now let's reset. Okay, so that's one trade. All right, so now let's come down to a little bit smaller. So we knew actually that since we had this double top right here that we bought, and we're looking for this to be an area that's going to get taken out. So this is a target. Okay, guys, this was a target. The market took out the target, turned around, and what does it do? So this is what I'm really trying to teach you guys, is that once you spot double tops and triple tops, you mark that as liquidity. Know that that's a target. And you do the same thing on the bottom side. Once it gets taken out, we look to enter the market, and our goal is to take out the liquidity on the opposite side right there. And that's exactly what the market did. It came and it took out that liquidity. Okay, so now what? Okay, so now what is it doing? Look at this. So now it's going sideways and it's setting up liquidity. Okay, we did leave this candle down here. Okay, and this eventually meets up down here. So we did not, unfortunately, if you didn't buy here, you would have drawn this as a fib, and we did not get enough of a push down to get a buy. You should have already bought down here, so there's no trade there. This is why I tell people you can't take all the trades. You take the best trades. There's a lot of people who want to trade every day. They want all the trades. This is a perfect situation where we would not have taken a trade, okay? Because it did not. If this is the start of liquidity in this area, right? It's forming a trend line, and it's starting to build liquidity below, but it doesn't break below it. We don't have an entry. We can't just start buying here because this is too close to this liquidity. It could very easily give us a wick up and then smash down. Okay, so we want to enter the best trades. All right, and that's a situation where we would have not traded because it did not give us a push down. Okay, so we did not take that trade, and it continues to go up, and it sets a high. Okay, so this entire time we're waiting for some sort of reason to enter the market. Okay, well, we get a push down, and now it's starting to go sideways again. It's starting to build liquidity on both sides. Oh, wrong tool. All right, it's three tops. We have this little zone right here. Let me zoom in. That way I can make sure you guys see it really well on your TVs and phones and whatnot. Okay. So there it is. We have a push down. I mean, technically, we could play this game over and over again if we really wanted to get down in the small time frames and come down here. We could say, okay, look, this broke down, okay, and it broke, and it broke. Okay, there's a 61.8. What is this? This is a little high, okay, and that's what it did. It come down. This is setting up liquidity in these areas. And it double topped. It kind of gave us a double top there. This is the internal liquidity push though. And so again, you wouldn't want to enter here. You'd want for it to break this, get up into your fib zone, and then take it, right? So it's not the cleanest 78.6 reversal, but we at least know that we have internal structure here that we want to break before we go the opposite direction. For the market to want to take out a lower high, it needs movement. It needs fuel. Okay, it needs something to get us there. Boom, boom. Again, that's not the perfect scenario. This would be a little bit cleaner. As you can see, all these wicks and all this liquidity here. And so what does the market do? Right? It starts going sideways. It builds liquidity. It shoots up into our zone right here, and then smashes it down and takes out this bottom liquidity. So actually, if you see, before it did that, this was actually setting up liquidity here and here. We see that it's selling off. We wait. There it is. There's our fib, top to bottom. Boom. Target at the bottom. There it is. Goes sideways. Okay, guys, same thing. What does it do? Takes out the bottom liquidity, which means our target is the top liquidity. So how will we have gotten into this trade? Well, we could be playing this double bottom. This is a triple bottom, which I'm not excited about. But if we think about this and we get rid of this liquidity, what do? We could do fib, top to bottom, this top, okay? We know that this is the target up here, all this liquidity, and man, did it hit our stop loss? It would have been so close. Yep, it would have got us by a pip. So again, every strategy is not as absolutely perfect, but we're going to get into more of the building the fibs. And I bet if we actually built the fibs better, and I wasn't just doing this off the cusp, we would have seen that that's probably not a valid entry. Let me just delete some of the stuff. Okay, so let's come to the 2 hour. It probably wasn't even oversold on the RSI, but anyways. So if we would have zoomed out and we'd have seen the market and we'd have seen these liquidity, which one was it that took us out? This one right here. Yeah, that's not a good, because I mean, look, we're still not even the 78.6. We're still not quite low enough yet. But again, that's besides the point. The point I'm trying to show right now is how the market builds liquidity on either side. And when we do this, plan A, plan B every time. This is a target. So as gold is consolidating and comes down, we know that this is going to get taken out. We can play, guys, we can play double tops. Okay? We can play double tops if the setup is there. This particular case, if you come down into the smaller time frames, let's go to the 30-minute. Okay? If in this situation, there's liquidity sitting right there. There's double tops, and it's forming a bottom. So what do we want to do? So, okay, well, if that's the case, right in our zone, doesn't hit our stop loss, there is liquidity. We want the market to come up, take liquidity. We take the trade the opposite direction. Where's our TP? 27. And guess what? It hits. Okay, then we keep playing this game. Okay, well, here's liquidity here. All right, where's the bottom? Here's the bottom. There's the top. Okay, what did it hit? Let's just drag this out. I think this is the trade that Fausto maybe had got into. Right here, look at what it hit. The 78.6. Exactly on the deal. So the point I'm trying to make here, guys, is you can build fibs on top of fibs, sell fibs, buy fibs, and whatnot, and get them to line up. The number one thing is, let's look for what liquidity is, and that is the target. So the liquidity on bottom got taken out, right there. Our COP liquidity is our target. As you can see over here to the left, it got smashed, and our TP right there got hit. So let's break this trade down just a little bit more. I think this one would be a good one to break down, because I also want to talk about Elliott waves. And this one's not the most perfect Elliott wave, but it gives us an idea. Okay, guys, so we're going to draw this fib top to bottom. Okay, and we know that the 78.6 is right there. I'm going to put a blue line there. 78.6 right there. And it's also our buy zone, as you can see, is already marked. It hit the top of our buy zone. If we know that this is a push up and we're drawing our fib from here to there, let me delete that, wrong one. If we're doing this and we're drawing our fib from top to bottom, and then we see a retracement, which would be from here to this bottom, okay? Let me draw it out so you guys can follow with me. From this here to that bottom, because after that it retraced all the way up here, which is our other entry at the 88.6, but let's forget about that. Look at where this 27 extension lines up. It lines up exactly with our 78.6. So when you start to build fibs in the up direction, and then this first leg comes down, all right, then you can see the extension. A lot of times I like to fib out the second leg. So this would be the push up. It creates a new low right here. That would be the second leg. A lot of times I like to take this second leg's extension before a turnaround. This one didn't give us a 2-leg, it gave us a 1-leg. We can get deeper into Elliott waves later on with other examples, but just know that if you have one fib in one direction, you have the other fib in the other direction, you can then line up that TP with the buy zone or the other fibs in the opposite direction to give you more confluences. And also, if you look right here, I like to take trades when it's oversold on the RSI. It is not. I'm putting my foot in my mouth here, and it is oversold there with just a few pips short of the 78.6. I think in that situation we might have just put a limit at the 78.6 and called it a day, and it did not hit. But the one thing you do have then is you do have divergence, which you would definitely didn't take the trade because it is getting lower at the same time this is getting higher. And that was such a quick, I remember this. That was the news when the market opened, and that was a 1 minute candle that shot down. Yeah, there it is. That's a 1 minute candle that shot down. So the only way you would have gotten to that trade is if you had a limit at the 78.6. Let me zoom in. I know it looks kind of crazy for you guys right now, but there it is. There's the 1 minute candle that got us right into the buy and took off. So that is when limits can help. So let's reset this. Okay, and I was just the point of me doing this is to show you guys how you can go from one liquidity zone to the next liquidity zone to the next liquidity zone to the next liquidity zone. Okay, so we had this liquidity zone, as we just said. We had that 78.6 buy. Let me delete all this stuff because it should not be pertinent anymore. Okay, delete all this crap. Okay, delete. So where are we at now? So again, we saw that this was liquidity, triple top. That was the target. Where is our next target? 1, 2, 3. Right there. Okay, that's the next target. Where's our target on the bottom side? Well, we still have this zone from that fib. Okay, on a much bigger fib, this is the 61.8. That's why I have it marked here from other fibs. I'd have to go back in time and figure out how I bought that fib or how I could grab that fib, probably on like a 2 hour. Let me see if I can get that one. So if we do a fib from there, let's just say to here. Let me go to the 4 so we can get a little better view. And that is the 61.8. So that's top to bottom right here. Okay. Actually, yeah. There to there. I don't really like that now that I look at that. Again, this is from that breakout to, it should be to right there. It should be there, and actually it shouldn't be there. It should be from here. So this is how I got this buy zone. Let's delete this because it's not pertinent. So from this bottom to this top, our buy zone is right here, 78.6. All right. And then I think the way I did that one is this is something that's kind of like next level that I don't do that often, but I do it just for the hell of it to kind of see if I can really get a good entry. Is if I fib that from there to there. Well, that's not how I did it. I don't know how I got the 61.8 at 61.8. I just know that I was playing with fibs one day and I got it. So I'm just leave it there for the hell of it. But anyways, the point I'm trying to make is where's liquidity? Right here on top. This is 100% going to get taken out. So the only question is how do we get into a trade to take out that liquidity? Let's come to a smaller time frame and let's look and see if we can find some liquidity to be taken out. First of all, we have this. Okay. We have all this right here. So this is going to get taken out. So if we do a fib from this bottom to this top, okay, we have our buy zone here. Right there. We also have this wick and we have this zone here, all these candles here. So I feel okay about taking that trade. So if this was me, I would look into a 78.6 entry right there. Wrong button. Right here. Okay. I would look into that because our TP is there. Our stop loss would be here. We then have the double bottom there. We would, maybe this double bottom here breaks, but then we also get into this consolidation, which is an order block that led to this push off. And if that fails, we still have this area down here, and even if all that fails, our stop loss is still below all that. And if this fails, then shit, it's going further, right? So this is a 2022 to now that's a way too big of a stop loss. I'll admit, way too big. So what we're gonna have to do then is we're gonna have to be more snipey, which is perfectly okay. So then what we can do is wait for this to come down to our zone, into this area, okay, and get into the smaller time frames and see if we can't find one of these. All right. Once it gets down there, we can reevaluate, but then we could do one of our little sniper specials, top to bottom fib on that internal break of structure, and then our stop loss would be much, much smaller. You'd be entering here, and our stop loss would be something like this. But we need to wait for those confirmations. But that's not really part of this video, this section of the video that I'm trying to get to. Okay, the point I'm trying to make is look for liquidity, build your fibs top to bottom, and then wait for the market to get into your area. And so right now, if we come out to let's say the 2 hour, we know that we need to buy. We know that this is the target. We also know that this area down here is set up a good trend line, and all of this down here is a target. This is all liquidity. I'd like to see it. So what is our plan A and plan B? Plan A, I would rather hope this would come down, get down here, and we buy to take this out and hit this TP. If that doesn't happen and this market shoots off from here, there's nothing we can do about it. Let's wait for it to take this liquidity out, find resistance in this zone, and we'll start building fibs probably around this area, and then we shoot down to take out this bottom liquidity. This is why we do this at nighttime. So the morning when we wake up and this is down here, we're not surprised and we take buys. Let's look at 30. Okay, so on 30, what we did is we had a little area right here of, you know, this little consolidation block here. We're not playing this area to buy off of. We need this to get smashed, and all these people who have sells and buys in this area to get taken out, come down lower, and this is our buy area in which our 88.6 got hit perfectly. NASDAQ and 30 love 88.6, and it buys off. So again, the theme, what I'm trying to tell you, plays over and over again. Build your fib, look for your areas, wait for the area to get hit, and go in the opposite direction. There it is. Now this particular trade was during the NFP. So what did we do? We drew a fib at the time. Okay, at the time, the market was right here. At the time, we did not see any of this. All right. And so if we're looking, this is a double top. There's no way we can sell because we don't know where the top is. It could keep going. So when NFP happened, we're looking at this and we fibbed it from top to bottom, there to there. It came down and gave us a perfect 50% entry, and we took the trade. Okay. If we come down and look a little bit further on the 30-minute, we saw that it was starting to reject, and we hit it. Look at oversold. We even come down. I think we were trading this on the 5-minute chart. It came down. It showed us that buyers were in the area, popped off, came down, popped off, and started to oversell. And by this time, now we're divergent. 1, 2, 3 touch on the divergent is my favorite pattern. On here, I don't like it when the little buttons are in the way. Right here, 1, 2, 3 touch. Once the third touch happens and it's still divergent, you'll see with a vertical line that third touch was right there, and we would have entered on there. There is our entry right there, and that is all of 35 pips drawdown on US 30, the most volatile pair on NFP, one of the most volatile days of the news, and it went for how many pips is that? It doesn't say 2,000, does it? That's ridiculous. And we smashed that. We smashed that trade. That was ridiculous. Okay, I don't see anything in the chat, so I guess everyone's good. So the same thing with NASDAQ, and I wanted to review this with you guys because this is a perfect situation. This is how we trade, right? We look for liquidity. It's being built on the bottom and on the top and on the bottom. Okay, so why this happens, like if we replay this and we go to right here, is it going to replay? Replay. And it goes to, let's say, right here. Okay, guys. So what we're looking at then is we see that there's this top up here. That's why I have this blue, or the purple. And we see that there's a bottom, and this is it. I see that the market's pushed away, so I fib this from this area from here, from here. Okay, because that's where we're at, because we're right here now, right? What do we want to do? We want to see this liquidity get broken on top. We can't take sells until this liquidity is broken, because we're buying. We don't enter at liquidity. We enter once liquidity has been broken. So what we want to see is either two things: a break up, and then we take it down, or we want to see a breakdown, okay, and then we buy up. Okay. The market you need to understand, the market needs orders, it needs stop losses, it needs liquidity to go in the other direction. So if it's going to set an all-time high, it has to come down to screw people out of their trades and hit stop losses before it has enough fuel to break. So we want to wait for the fuel liquidity to get broken, and we go with the big boys, okay? So in this situation, we see this. We have a fib from top to bottom. We see that this is right at the 50%. And I'm going to make this a different color so we can keep this organized. This is 50% right there. Okay? We do another fib. Again, guys, you can draw more than one fib. Draw this fib from this swing low to now this swing high. And we see, this is going to get a little crazy, but you can see that our buy zone is right here. I'm going to delete this just to keep it clean. There's the 50. Here's our buy zone, the 78.6 on that. So now we have two different fibs from two different ranges lining up in the exact same spot. This is giving us hope that this is going to come. So if we play this, all right, building up, again, we can do nothing. This is our no trade zone. We're not trading in the middle. Okay, we see it come down. We're waiting. We're waiting, and boom, there it is. There's the sell-off that we needed. And now look what happened. We're on the 30-minute. We're oversold in the RSI. I'm only guessing that it's oversold in the 1 hour as well, which is our trigger. Now that it's in our zone and now that it's oversold, we now have the right to enter the trade. It only gets sweeter. It only becomes a better trade if we have divergent. Well, look at there. This is the low oversold. It has now gotten weaker as the price has gotten lower. So now we're really like, hell yeah. Now we're really good. On NASDAQ and 30, we like to enter the 88.6. Again, I don't know why I'm using that button. So here we go. We like to enter here. There's our stop loss. Our TP is at least the double top. Okay, now let's play this forward. And there it goes. Boom. There's our TP. Right? That is a 3.8 to 1 trade. We leave a runner because really what we want to happen is we want to hit this TP, the 27 extension, which then is also the double top on the higher time frame. So just for shits and giggles, let's play it out. And where is it at? Boom. There's our TP. Nailed it. That's how you want to do this every single time. Draw your top liquidity, draw your bottom liquidity, draw your fibs in the direction, and plan out the trade before it ever even gets there so that when it gets there, you're ready to go. You use the fibs and the RSI as your confluence in saying if it's oversold or overbought, it's in my zone, it's in between the 78.6 and 88.6 area. I know where my stop loss is. If it double tops, I'm in a good 3 or a 4 to 1 trade. Everything makes sense. Take the trade. Take the damn trade. All right? There's your confidence. You hold it to a double top and you smash trades. There it is. So let's exit out of this. Yes, exit. Okay, so where are we at now in NOS? And look at that. Jesus Lord. If you would have gotten into this and you would have held a runner, you're at, I don't even know how many pips that is. This is ridiculous. But this is how you can take trades. And you would be at, over 1,000 pips with a drawdown. No drawdown, really. No drawdown, but you risk 79 pips and you're over 1,000. Now, no one in the right mind is telling you to hold your full position for all 1,000 pips. That's ridiculous. But you would have had a runner at 1,000. And if you're trading a normal account, you've got $1 pip. That's a $1,000 runner. No one's complaining about a $1,000 runner. right? So then we keep playing this same thing out over and over again. Okay, look, guys. Here's liquidity being built. Okay, we obviously know we're in a bullish market. We go top to bottom, and look what happens. Liquidity gets taken. It goes right into our zone, and it pops off. What's our TP? Double top right here. And guess what? It hit. What's our other TP? Double top right here. Guess what? It hit. There's another winning trade. There's another one. And we just do this over and over and over again. We can sit here all night long and go through all these charts and just do this. But these are trades we took. This isn't like we didn't take these trades. Obviously, this one came down, hit, stop loss or knocked you out at break even before it hit full TP. But again, you're almost damn near TP on this one, which is, again, you would have shaved some partials off of this and protected, and you would have got broken out at break even, which I believe I did. But you're still at 240 pips up. 240 pips. You should at least be taking some profit off and breaking even, for crying out loud. All right. So, again, we just play the same thing over and over again. There's 30. There's Nas. We've done gold. We can do a market overview later on. But I wanted to show you those pairs because that is the strategy. We can dive into how to take other entries. Actually, let's do that now. Let's look at US 30, and I'll show you another way to get an entry if the market does not fully retrace to your 78.6. Now, in times of really strong markets, let's just come out a little bit of a time frame. I'm going to give you guys another entry strategy. You guys haven't heard me talk about this one too much, but there is another one. Let's go to the 4 hour. Okay. I might as well just delete all this shit. I can mark up the charts again later. If you come out to a 4 hour chart, let's say, and you see a break, a strong break, okay, like this candle, for example, you see a strong break. What are the possibilities of a strong break coming all the way back and retracing at any time soon? Obviously not very much, because it's a good example. This happened December 23rd, and it still hasn't came back. What you can do then is go to a smaller time frame, let's say the 1 hour. Let's get back on it. And again, this will also work in smaller time frames, even though I don't deploy this strategy during smaller time frames. Okay, so this is called the trap candle. This is not, I like the trap candle, so let me draw. I'd rather the trap candle be in this area, but in this particular case, it happened right here. This is when this hourly candle closed and we had these wicks. Some call it a trap candle, I call it a kissing candle. And let me zoom in on this so you could get a very good, clear picture of what I'm talking about, so there's no mistake. Okay, this is a kissing candle right there. Let me draw a little box around it. So what you can do then is you see how this wick comes up, this wick comes down. In this area, there are people who have sells. Okay, let me just zoom back out. I'm going to see if we can figure out why are they selling. Okay, I don't know why they're selling, but I know they're there, and I know they're selling. So let's fib this top to bottom, and look what holds. 61, and I didn't plan this, by the way. The 61.8 fib is right in the middle where those hourly candles kiss. On that huge breakout, there are people who are probably taking sales here, thinking this is a fake out wick, and this huge sell-off from this top up here is going to continue. And there are people who are trapped right there. Let's go to the 15 minutes so I can show you what the candles look like. Let's zoom over there. Sorry, this is the part that sucks. We got to zoom back and forth. But anyways, so let's zoom in on this little trap candle. When you have a very strong market, it pushed away that much, what I want you to do, guys, is go to a higher time frame, the 1 hour, the 2 hour, and look for kissing candles. Highlight that kissing candle, and then come down into a smaller time frame and confirm that there is a sell candle in that area, which there 99.9% chance will be. There is a sell candle. What does that mean, guys? You can sweeten this up by looking at the fib from the sell, in this case the sell from the other direction. If a fib lines up like it does here at the 61.8, now you really know, oh yeah, there's people selling. Also, look at this RSI, way oversold. There are people selling. These people are trapped in their trades. Okay, they're trapped. So what you can do is then draw this out, okay, from that top of the candle to that bottom of that candle, and it gives you a range. Look what happened, guys. Again, this is just one random 4 hour that I pulled out of my ass. I didn't plan this. Look what happens. It touches. It did not get all the way into the range. I know a lot of people who like to take trades in the 50%, but you do what you got to do. Look at the RSI is oversold. All right, guys. So we see it come into our area. The RSI is oversold. As a matter of fact, it's giving us a divergent. Actually, it's not. I'm sorry. It's not giving us a divergent because that's lower. But look, that's two confluences. You have actually three. You had the RSI, you had the fib on the backside, you had the trap candle, and you have the RSI saying it's oversold. It makes sense there are people here. The market is going to push down, letting these people get out of their trades before it pushes back up. You could have taken that trade. And there it is. What's your target? The double top. And there it is. Okay, where would your stop loss be? Well, you want this area to hold. So I wouldn't put it at the very bottom. You'd put it just a little bit below that candle. It's up to you. But, you know, so many pips below that candle, there's a 6.5 to 1 trade. You only deploy that when you have a gigantic breakout on like a 4 hour chart or something. And in your brain, you're like, there's no in hell the market is coming back to that area anytime soon. And I'm sure in the hell I'm not going to wait a week for it to happen. I need to get in some trades. Let's see if we can figure out something. And that's when this happens. Okay, that is a perfect example that I just pulled out of nowhere. Okay, look for a huge move, break it down, find the kissing candle, find the sell candles that are inside of that huge bull. I mean, you wouldn't think by looking at this candle on a 4 hour chart that people would be selling inside here, but there are. And that's exactly what happened. Those people are trapped. That 15-minute candle on the US on the gold, that's not me and you. Those are banks. That's real money putting in sells. They're going to push the market back down to get themselves out of those stupid mistakes, and then they can get out of their decisions, right? And then take off. And just, you know, now that I'm looking at this happens to also be this area here, which happens to also be the kissing candle right there. Okay, look at that kissing candle. You wouldn't know it, but it's inside this one as well. So I guess you could call that head and shoulders if you wanted to. But that's besides the point. That's the other entry that you can take. Okay, so that's two difference. The bread and butter, which is liquidity zone fib top to bottom. If there is no fib because you have a super strong market, look for a kissing candle inside of that. There's only one other type of trade. And again, you guys don't hear me talk about this very often, and I don't deploy it that often. But the other one is, and let's see if I can find a good example, is a breaker block. When you have maybe I need to go to 2 hour. When you have a block, and I hate to use this as an example, but we could use this. When you have a consolidation zone like this, right before a huge down push, you can use that as a quote, the order block. You want the price to come back up and retest that order block. Now, the reason why I don't talk about it is because that order block is going to fall within our fib zone 99% of the time, right? And actually, this fib zone should be from here because that candle was there. But we already talked about this one specific trade. But just know that this is an order block, and it led to a huge sell-off. So you have another form of confluence is saying this is the area this block needs to come back up and get retested. Why? Because we just explained that there are people buying right here, and now they're screwed because the market left without them, and they're in drawdown. So those big banks are going to put money in the market to push the market back up here, letting them get out of their trades and relieving that pressure before it sells back off. So before the thing leaves the market, a lot of times it wants to come back to the order block. It doesn't always. Doesn't always come back to the order block. That's why I like to rely on my fibs more. But just know that the order block basically is inside your fib zone. But this is why sometimes you'll have a double top. Why would it break a fib? Because it's just relieving the rest of the pressure off and giving us the double top and double bottoms before it takes off. So there's basically 2.5, if you want to say 2.5 types of entries. All right. I don't have any questions in the chat, so I'm just going to keep rolling. Let's look at we talked about GJ, but I want to just dive just a bit more into GJ here, because I was looking at this on the weekly before this call, and I wanted to show you guys again that I don't know why I put this blue line here. Let's delete that. That this sell-off is now at the 88.6. We come to the 4 hour, okay? What did we see? We saw liquidity. We saw this block down here. This is the order block that I have marked. Liquidity got popped. It come up here, and it's double testing. It has a double top here, which I'm not super excited about. Eventually, that's going to get taken out. I just don't know when. And let me just reset my chart. Sorry for scrolling. Let's reset this chart. We're in sells on GJ, all right, because we saw a break. I've got fibs going galore, but it did hit our TP1. I'm going to delete this fib, and I'm going to keep this fib. So this is the area where it broke out, right? Broke from here, consolidated, set up liquidity, broke down, took liquidity, came back up and broke again and hit our TP zone, and now is returning. So, it hit our entry zone. So I'm hoping this does this, and then breaks this and goes. That's why I'm in sells. I'm not 100% confident in that because we do have this double top up here. I should have already taken my TP and I didn't. I let it ride. I actually did enter in another position right here, actually like a couple hours ago, whatever. But really, if you think about this, with our strategy, we have a break, okay, right there. We have this, which is the liquidity zone right there. So really what I think is going to happen is this is probably going to push up, find a fib level, and then break down and come over here. But this is what I wanted to just review this with you guys real quick, is that we're looking for these levels. And also, this is why I wanted to show you that when you draw a fib from top to bottom, that you like to see these zones being respected. This is the 38.2, and this is where you can see it's rejecting, broke through, a little bit of consolidation. But look, the 50, respect to the 50, respect to the 61.8 right here, gave us some wicks, respect to the 78.6, come back up, and unfortunately it did break through the 50, but it's just still in this little area right here. So it kind of gives me a really good feeling that this fib is in the right spot. These levels are holding up. So whenever you draw your fibs, look to make sure that the levels in the trade are holding, and that gives you more confluence that your fib's correct, more confluence, more confidence knowing you can enter your trade. So there's a million ways to draw fibs, and they all lay on top of each other. So don't be scared to lay a couple fibs out there and look for the places that start to line up. We can get some Elliott wave talk here, the 61.8. So this is a break, right? So if this was a consolidation zone, this downward push from here to this first, from here to there was leg one. Look, guess what? Leg one hit perfectly 61.8 perfectly, which was our turnaround spot for the buys. That's exactly what it did. This is still only gave us really one leg of the Elliott wave. So this is another confluence, the reason why I think this is going to come down lower. First leg, retracement to the 50. Second leg, which hit TP, retracement, giving us a double top, and hopefully this is going to be the third leg on down, and I will take my TP down there again. The reason why I said this to you guys is to review the internal moves and the Elliott waves, and how you can use, even though we're in a bigger buy fib, how you can use the internal structures and the TPs of the internal structure to get into your buy zone, giving you more confidence that that's where the market's going to turn around. And that 61.8 was perfectly on the pip before it turned around. You could have held a sniper entry right there. If we have any of the Bored Ape guys on here, I'm going to do Solana real quick. I see Solana again. We have a two fibs buying up. All right, I have a fib from here, top to bottom. Okay, and then I have another fib from this bottom, from there to there, buying up. And the reason why I chose that is because I like where these lines up. This fib here, if I just move it just a little bit, you'll see Let me actually line it up right there. I like it better right there. Excuse me. I must have moved it on accident. This is our buy zone right here. Okay? This 78.6 right there. We had this lets me feel good because now the 50% of this zone got hit on this fib, which is really close to the 61.8. Just know that we have all these fibs. I don't want to break this shit down too much. I'm getting tired. All these fibs are in here, and they're all starting to line up in these key areas. And if you look at this TP of the 27 right here, which lines up the 78.6, which is in our buy zone, which is also this bigger 61.8. If I move this one right here, you see that's also the 61.8 there. So I'm going to delete this buy zone so we can see this better. Delete, delete. Okay. We have an extension of a TP. We have the 78.6 on the smaller fib and a 61.8 on the bigger fib. And that would complete the third leg of the Elliott wave, hitting all the TPs. And I feel super confident that that's where Solana is going to buy back up. Right at the psychological level at $90. So for any of the NFP, Solana, Bored Ape guys in here, I think it's going to go to 90. And if we just take a step back for a little bit, we could also see that this zone, this 90, look at this zone right here is being respected. It's a zone. Respecting there, wick through here, consolidation. I mean, it's this zone technically maybe is a little bit lower. I'm actually more kind of in this area here, right, which is more along the 87. But again, if we're talking buying at 90, you're talking about buying at 87. It's only $3 a deal. It's not a huge difference. But we could see in that particular area right here, all these fibs line up perfectly. You got the 88.6 with the extension here, but really those three line up perfectly, which is the top of this, basically the bottom of that, and all of this consolidation. So I like it better. I like it better. I like the 90 with the big psychological level. I think it's going to 90. Anybody else have anything in here? Anybody else have anything in the chats? We went for a while, but I wanted to let me read this through you guys real quick. Large time frames, top to bottom, 2 hour, 4 hour. Mark out your liquidity areas, and where the price is now. From there, you start to build your fibs. Buy fibs, your sell fibs. Start to layer them over each other so you can start to see some confluence and start to see where they start to build up on top of each other to paint a picture. Come up with your plan A and your B at nighttime, so in the morning when you wake up, you can see where the market is and you could act accordingly. Wait for the price to get into your zones. Wait for the RSI to be overbought or oversold. And you can even, it's at least on the 1 hour, you could come down into the smaller time frames and the 3 minute or whatever and start to look for a third touch and divergence, or the 1 minute, and then pull the trigger. And by that point, you've got so many confluences that you should hopefully be in winning trades. And if you repeat that over and over again, you will be a profitable trader. And the guys I trade with have been seeing me doing it over and over again. And I'm not saying you're going to win every trade, but you're going to win more than you lose. And last week, our win ratio, I don't know, it might have been 100%. I'm not sure what it was, but it was pretty fucking high. I think honestly, the computer doesn't show us 100% because I took some scalps, I took some break even. So anytime let's say I take one entry and I take a second entry, and I'm like, oh fuck it, I'll move this first entry to break even, whatever. It'll count that. Sometimes if you lose 3 pennies, it'll count that as a loss, or 10 cents or a dollar or whatever. So the numbers are skewed, whatever. But basically, I think I only lost one trade last week. And it's because not even my trade. I was listening to one of the guys that I coach and like, hey, we should entry, and I was like, yeah, okay, fuck it, I'll take it. I ended up losing that one, but it is what it is. This is you guys' time for questions in the chats. I'll give you guys some time to type because you're delayed 20 seconds. So. I'm really excited that no one said there's latency problems and lagging and everything seems to be working right, which is I'm fucking super stoked on. We've been in the chat now for 1 hour and 4 minutes. Thank you guys very much, Brett and Jason, DC and Fausto. Thank you guys very much for joining in. I see there's 10 people on here. There's not 10 people I called out, so whoever else is in the chats, I really do appreciate you guys stopping by. And I wanted to tell you this too. I'm never going to charge you guys trading signals, markups, whatever. If those guys who are fucking gurus are so good, they're millionaires, why are they charging you $100 a month for signals? You know what I'm saying? Like, it's ridiculous. I'd rather come on here and talk with you guys and try to build something and build my name up, because as you can see, I'm a regular dude. I'm 44 years old, have a wife and a kid. I live in a house. I'm not out here trying to fucking flex Ferraris and shit. I'm a trader. I'm a real ass person. And I'm getting it just like you guys are getting it. So if I can help you guys, like my mentors help me, especially with the Bored Apes. You guys know Dak. Dax is one of my biggest mentors. So big shout out to that guy. He fucking completely changed the way that I look at charts. I've taken what Dak has taught me and added some sauce to it, and I come up with my own strategy. And I encourage you guys to do that. Is to take what I'm telling you on fibs or on liquidity zones, and if you guys want to add in the trend line thing, you guys want to add in some MCAD or some other fucking thing, go for it. Just do what fits you the best. This is what fits me the best, okay? I want to know liquidity. I trust fibs. I have a fib book. The RSI gives me my entry signal when it's in my zone, and that shit has been working like fire. And so it is what it is. Will you be doing a market overview? Yeah, I mean, we kind of did one. I could do it just super quick. We've been on here for an hour. Let's just do Nas real fast. Okay, so Nas, we're on the 2 hour. Okay, so we can't buy. All right, we already know we cannot buy because we're already too top. We're too close to the sun, as I like to say. We're setting a double top. We cannot buy. So the only thing we can do is then sell. Okay, so then we need to make a decision. Honestly, I see this might hold, but for now, let's just do this. Okay, let's do this fib. Let's see if this will get broken. We'll wait and come down here and we'll buy. Okay, we cannot sell right now. So we'll have to wait. Either it's going to come down here and we buy, or it's going to do one of these fuckers and set up liquidity, and then we can reevaluate there. But for now, we can't do anything. And basically, it's the same thing on US 30. US 30 is at the moon. So the only thing we can do is pull a fib from here to here, okay, there to there. Again, with a super strong. Okay, so this is actually, I take that back. This is actually where we might get into my breaker block second type of entry. And we might be able to try this. But when you have a zone that's this strong that gets popped like this, okay, we can just reset our fib. And we can do a fib from here to here. And again, maybe I'll go back and reevaluate Nas. But it might be this and gone. But we're not oversold, so I don't feel comfortable taking it yet. Maybe this can be our entry spot. See this wick right here, 78.6, and this one here? Maybe these need to get taken before it pops back off. And then this wouldn't be so much of a liquidity. Normally we see like a consolidation area for liquidity to get taken, and then we'll wait for it to pop through. This would be more of a straight up Austin Collins special fucking 78.6 and go, which would really be an 88.6 in our situation. Top to bottom, wait for it to hit the 88.6, wait for the RSI, and then target and go. That's really the only thing. We could take this as a calculated risk, again, because the risk reward ratio is there. We'll look for a double top, which would probably be closer to like a 3.5 to 1 trade. 4.5 to 1. We can take that risk, but know that we have to have another bullet, and we cannot be shy. We don't want this trade, if we lose this trade, to screw us with our mentality if it really wants to come back down here to this area. Because then look at what this is. This is really liquidity right there, right? That's the liquidity. So we can take a chance on this buy and go. If it loses, it's okay. Fucking regroup, and we'll take it from here and go. All right, we don't want it to. RSI settings are just as basic standings. I don't have the moving average on there because I don't give a shit about the moving average. I don't care if it crosses or changes colors or whatever. I don't care. All I want to see is if it's overbought or oversold. It's a 70. It's the 30, and this is it. Here's the RSI inputs. 14. And this is standard. 14. And close, and I don't care about simple moving averages. I don't even have it on here. If you go to style, it's just black, and I don't care about the rest of it. I made this purple just so I could see the area right here, and then overbought and oversold is green and red as you can see down here. Again, I don't care what the moving averages are. I don't even have them on there. I just want to see if it's overbought or oversold. All right. So there's dirty 30. We can try a buy here. 78.6. Actually, look, that 78.6 lines up with the 50 of the bigger fib. All right, that's our entry. We're going to call it right now. That's our entry. All right, guys. We're going to be looking to enter, as long as the RSI is oversold, we'll be looking to enter at 38,415 on 30. And let's see if we can do the same thing for this fucking Nasdaq. Okay. And honestly, look, it's going to be the same for Nasdaq because we had a huge breakout. The 61.8 lines up with 38.6, but right in the middle of our buy zone is right here, which is where the 50 is. So again, let's just call that out now. We'll be looking to trade right inside this area, maybe closer to right in the middle of it because that's where the 50 is. So let me delete this. Let me delete this. Let's just say that we're going to be taking right here at the 50, which is right in the middle of our 786 and 886. And this will be our first shot for the week. When it gets down here, we'll TP at a double top, but really we want this extension because this is a triple top in actuality, or whatever it is. And I think it's going to get smashed and actually new highs. So we'll call that out Nas now. 17,423 right there in that area. We're just going to wait for the RSI for confirmation when we actually pull the trigger. And on Goldie, I think we just talked about Goldie a minute ago. Let me back out of gold, just a time frame here. Okay, so we cannot really, if we're going to buy, I really want to see this just dip a lower, right? We're too close to the sun. Look at all this liquidity right here. Okay, so man, it's really tough. If this pushes up, man, this is a tough one because look at the trend line break. Okay, and this set newer lows, so maybe this is the reverse of trend to come down here and to clear all the shit out that I've been waiting for a long time. So let's do plan A, plan B. Plan A is dip. We'll look for some sort of resistance and we buy it up to break all this. Plan B, we got two plan Bs. We'll look for a retest of this area and sell off, right? Maybe we could do a fib from here to wherever this is and look for the 78.6, which is actually right there, which is actually perfect. And we'll look for this to break through all this. So plan A, a little bit of a dip. We'll find some RSI fibs in this area and buy up. Plan B is to let this push up over the next, several hours, get this double top, test this order block, and then we sell down to clear all. Plan A, probably plan B on gold. We only have plan A's on 30 and Nas, and that's about it. That's our pairs. I'm already in shorts on GJ, and that's all I trade. I'm gonna actually put real money in Solana when it hits 90 because I'm a Solana guy and I have NFTs in Solana. Oh, a lot learned tonight. Yeah, a lot. DC. You doing a market? There's your market outlook. What up, Juan? Appreciate RSI settings. Yeah, I just did RSI settings right now. I think that was an old comment, but it's just basic, dude. Just type in RSI on your deal and just leave it. Only thing I did different is I just turned off the moving average right here when he says upper RSI moving. I just turned that shit off because I don't care. Upper band, I don't use Bollinger Bands. I just use the RSI on a 14 RSI link on close. That's it. That's the only thing I care about. Keep it simple. I think that's it, guys. I'm going to wait for 20 seconds, see if any more comments come through, because you guys are on a little bit of delay. If you have comments, we'll answer them. If not, hasta mañana in the morning, 7:20, 7:15-ish Central Time every day. Now that I got the YouTube lives going, I'll just be going on lives. I'll just join me on lives. For the pips, for the pip guys, I'll throw out a Zoom link, and I'll see if I can do a Zoom. That way you guys can live interact with me while we're doing the YouTubes. I like it better when you guys can actually talk and ask questions and shit. So there's the one downside about the lives on the YouTubes. Thank you, Nikita. Thank you, Juan, Salman, DC, Brett, Jason, my boy Fausto, killing it. That boy Fausto, better be putting some fucking love in the chats, dude. This guy's been murdering trades. But that's okay. We're all going to get there. We're all going to fucking murder trades. I'm going to get all y'all with us. and pay y'all's mortgages and cars and shit. Definitely love all you guys. Really appreciate y'all coming out. Do me a favor, man. Like, share, tell your friends. If you have anyone else is in the training community, y'all know. Fucking tell them to stop through. Again, I'm just doing this for us, man. Doing this for the YouTube community. If I get people and people follow me and people doing this, YouTube will pay me. I don't need y'all's money for fucking signals and for all this stuff and da da da. Hell no, I'll let YouTube pay me. Y'all just like and subscribe and fucking keep the love going, and then we're good. You know. Don't worry about those dudes fucking selling signals and trying to sell some bullshit courses. Believe me, I've taken those courses. Those courses are fucking ass. If you're in a group called CA, those fucking courses are ass. I look back at that now and it's like, Jesus, this guy is fucking. Anyways, I love all y'all. Have a good night. I'll see y'all tomorrow morning. Safe trading, risk management, baby. Do y'all's morning.